Ever wondered why everyone gets hyped about Bitcoin halving? Well, it's more than just a trend. It's a significant event that shapes the crypto world, influencing the supply of Bitcoin. No, it's not a random occurrence, but rather, it's an integral part of Bitcoin's design. An event that's as mysterious as it is crucial. It's a concept that's both intriguing and complex, and understanding it can give you a whole new perspective on Bitcoin. So, let's get into the heart of what Bitcoin halving really is. To understand Bitcoin halving, we need to dive into the timeline of Bitcoin's existence. Picture this. We're in the year 2009. A new digital currency named Bitcoin has just hit the scene. It's decentralized, meaning no government or bank controls it. Instead, it's maintained by a network of computers, or miners, who process transactions in exchange for new Bitcoins. At the start, each miner received 50 Bitcoins for their efforts. Fast forward to 2012. Bitcoin's creator had a vision for a currency that could fight inflation, one that would decrease in production over time, mimicking the finite nature of gold. Hence, the first Bitcoin halving occurred. The reward for mining new blocks was halved from 50 to 25 Bitcoins. This event was the first test of Bitcoin's anti-inflationary properties. In 2016, we saw the second Bitcoin halving, which further reduced the reward from 25 to 12.5 Bitcoins. The result? Bitcoin's inflation rate dropped again, and the price of Bitcoin began to climb. The year 2020 marked the third Bitcoin halving, with miners now receiving just 6.25 Bitcoins for each new block. This halving sparked a significant bull run, pushing Bitcoin to new all-time highs. So, what exactly happens during a Bitcoin halving? Essentially, it's a pre-programmed event in Bitcoin's code that reduces the reward for mining new blocks by half. This mechanism slows down the creation of new Bitcoins, ensuring that the total supply of Bitcoins will never exceed 21 million. By reducing the rate at which new Bitcoins enter circulation, Bitcoin halving events aim to prevent inflation and preserve the purchasing power of this digital asset. This cyclical halving continues approximately every 4 years, or every 210,000 blocks to be precise. It's a self-regulating system designed to maintain the scarcity and value of Bitcoin in the face of increasing demand. And that's the essence of halving, a mechanism to control inflation and maintain the scarcity of Bitcoin. Now that we know what Bitcoin halving is, the question is, why should it matter to you? Well, let's delve into the economics of supply and demand. With every Bitcoin halving, the number of new Bitcoins generated and earned by miners is cut in half. This reduced supply, if demand remains constant or increases, can potentially lead to an increase in Bitcoin's price. This is due to the simple economic principle that when supply decreases and demand remains constant, prices rise. However, it's not just about the potential price increase. Bitcoin halving significantly impacts miners. As the reward for mining reduces, only the most efficient miners, those with access to cheap electricity and powerful equipment, can continue to mine profitably. This can lead to a consolidation in the mining industry and potentially greater security for the Bitcoin network. Moreover, Bitcoin halving events serve as a reminder of Bitcoin's scarcity, one of its key differentiators from traditional fiat currencies that can be printed without limit. With only 21 million Bitcoins ever to be produced, each halving event brings us closer to the point when no more Bitcoins will be generated. This is why you should care about Bitcoin halving. It's not just a technical event, it's a market influencer, a miner game changer, and a stark reminder of Bitcoin's unique value proposition. So, Bitcoin halving is not just a technical event, but a significant milestone that can shape the future of Bitcoin. To sum it up, Bitcoin halving is an event to watch out for. This fascinating mechanism, built into the very DNA of Bitcoin, serves a dual purpose. It helps control the production rate of new Bitcoins, ensuring scarcity and preventing inflation, much like gold mining in the physical world. Simultaneously, it rewards the miners who keep the Bitcoin network secure and running smoothly. The impact of Bitcoin halving on the network itself is significant. It's a moment of adjustment, a testament to the ingenious design of Bitcoin's decentralized system. But perhaps more intriguing is its potential effect on Bitcoin's price. Historical patterns suggest a possible increase in value following the halving event, although it's important to remember that past performance is no guarantee of future results. Keep an eye on the next halving event. It might just be the catalyst for the next big change in the crypto world.